Don't fight in the north or the south. Fight every battle, everywhere. Always. In your mind.
For centuries, our families fought together against their common enemy, despite their differences.
Together. We need to do the same if we're gonna survive. Because the enemy is real. It's always been real.
When the snows fall and the white winds blow,
Alright, traders, so fairly complicated and interesting night last night. Now, clients all day have been asking the same question, you know, why is dollar yen higher and why is the euro higher, right? What's going on here? How's this possible? And you know, this anytime you ever see something weird going on in the market, like dollar yen higher at the same time the euro's higher, 9 times out of 10, and I've said this many times on the stream, it's in the bond market. Okay, so Yellen was not dovish. Yellen was actually hawkish. Did the bond market react as much as Draghi? The effect on the European bonds? No. So the yield change in European bonds was much bigger than the yield change in US bonds. What does that mean? What does it mean? Well, it means that the euro against the US dollar rallied. The dollar against the yen rallied because the bond market in Japan didn't change, right? So what really moved? You know, what was the biggest mover almost overnight? It was the euro yen. So euro had its huge move in yields, dollar had a small move in yields, Japan didn't have any move in yields, therefore the yen was the weakest pair. How do we know that's the case though? How do you know that it was not US dollar weakness, right? Well, the question you have to ask yourself is, did everything move against the US dollar? Well, the pound moved against the US dollar, alright, but the pound and the euro are sort of buddies, right? And they do move together a fair bit of the time. You can put them together most of the time actually, and without the Brexit issues, they were moving in unison a lot more than they have been. And why did the pound rally? Well, there was some big stops above 128. And they were easy pickings in the euro ramp up. What was causing a little bit of euro pound buying in sympathy with the euro? Well, the euro pound was at some key levels at 88.50, and those levels are not going to be easy to get past. So the pound was sort of dragged along. In terms of the second clue, though, second clue was that gold didn't get past, or didn't really shoot higher, right? So it wasn't a US dollar problem. It wasn't like Yellen was dovish or there was an issue there. Yellen actually caused a couple of things to happen. One was yields to go higher, as she discussed further rate hikes, or the US economy can handle further rate hikes, right? So that's I mean, the market was like, oh, okay, well, she seems to be talking the talk. We're going to start pricing a little bit of this in, because they haven't been pricing as much Fed action in as the Fed has been saying they're going to do. She keeps saying that they're going to do stuff, so you know, you have to at some point the market will start to respond to this. And what else happened? She talked about asset classes being rich, the valuations being rich. That's like saying that, you know, stock prices are a little too high, or potentially bubblish. And so you did see selling in the stock market, gentle but enough to cause a little bit of concern. And you know, the biggest sort of laggards last night, pound went up, euro went up, was Aussie and the Kiwi. All right, so the Kiwi enjoyed a nice little pop above 73, then had a vicious sort of reversal, and a pretty interesting reversal, and it's actually leading us to a trade that we're going to be talking about today, right? And this trade's why the Aussie and why the Kiwi are struggling in sort of a euro rally environment. It's because their yields are not moving, right? Their yields are fairly flat, and the market doesn't expect much to happen in the next couple of well, until late next year at any rate. And there hasn't been any sort of change in tone from those central banks for a long time. And so what the real thing that's happening there is you're getting something called yield compression. All right, so European yields are rallying, UK yields are rallying as it's, you know, potentially going to raise rates in November, and US yields are rallying, but Aussie and Kiwi aren't. And Aussie and Kiwi have been enjoying a lot of buying on the fact of that they had a yield advantage, right? So they've been outperforming broadly for a long time, and especially in the last 2 weeks, right? So if you're looking at something which is moved incredibly overnight, it's the Euro Kiwi. So the Euro Kiwi actually did a very bullish reversal, and you saw that bullish engulfing candle come up. Let me bring it up so you can see what I'm talking about. Huge move, really destroyed it. You know, holy hell. It ate like 6 days worth of selling in 2 days. In 1 day, sorry. So let's have a look at that. That's the daily. Watch. Like almost 2 weeks, sorry, of selling in 1 day it took care of. So Euro Kiwi is the main benefactor of all the things that happened overnight. You know, right? So Euro Kiwi, everything lined up perfectly to destroy that. Market been selling, made a new low, reversed, stops got hit, shorts got squeezed, more stops got hit, and it's left the Kiwi and the Aussie in an interesting position. You know, you had iron ore rally 5% yesterday, and the Aussie couldn't break and hold above 76. That's not great. You know, if I woke up this morning going, wow, how's the Aussie law? You know, how's dollar yen higher, and how's the Aussie lower? You know, that was the two questions I had to figure out when I got to work, and it was because of the bond market, right? So the bond market's in play at the moment, and there's going to be more in play, especially when the ECB starts to move. And so this is really the reasoning behind why dollar yen went up, euro went up, Aussie went down, and pound went down. So what does that mean? Given the way that stocks have been reacting, and I want to spend just a little bit of time quickly looking at that, stocks are in an uptrend. Alright, stocks are in an uptrend, and what happened? We had a little bit of selling with oil. We sold off with oil as well, and we're like, oh, this could be the start. And then it's found a bit of support with oil and started to grind back up, and all of a sudden that Monday rally was reversed sharply, and didn't make a new high. So it's like, well, that's a bit, that's not a very good sign. If this was a currency, you'd be looking at going, oh geez, it really can't get past that 21.50 level. I'm gonna maybe be looking for the market to roll over here. How long has it been rallying for? Multi-months, 6 months, 8 months without a significant pullback. All right, and so that's a very bearish sort of price action. And then you had Yellen coming out talking the market down, and you made sort of new lows. Only a couple more days selling, and all of a sudden you could get a cascade of selling just on profit taking, and sort of a fear that a correction's in play. All right, and Yellen's another reason as good as any. So while oil was a pretty good reason, the Fed chair saying that asset prices are overvalued, stocks are too high, is a strong reason. We're worried about bubbles, right? And so that alone makes me wary about being long dollar yen, because dollar yen still is a safe haven. regardless of what US bond yields are doing. If stocks fall, dollar yen's not going to do too well. So I'm a little bit worried about chasing dollar yen, but that would also add to the selling of the Aussie and the Kiwi, right? If we did get that. Now we don't need that. We don't need that at all for Euro Kiwi and Euro Aussie to continue their rallies. Right? We don't need anything for this to continue because it's a big story, that yield compression. But it would help, and it potentially, if we did get stock market selling, it would add to the selling pressure coming through, because broadly when stocks are sold and sharply, Aussie's going to do poorly. Yeah, and Aussie yen selling would add to the Euro Aussie buying, and you've seen that before. If you've been trading for over a couple of years, you know what I'm talking about. When Euro Aussie's soaring and Aussie yen's getting ripped apart, Aussie dollar's getting ripped apart. Yeah, so it's just one of the things that happens. Whether it should happen or not happen, it's not the game that we play. We play the relationships that are in play at the moment. Alright, so Jenny, did you hear what I just said? The whole rant there? It's yield compression, and it's a big sort of motivator in these sharp reversals, and it can definitely continue. Yeah. Will it mean that the Kiwi sellers, the retail sellers, might get out of trouble this time? They might. They might get out of trouble. Let's look at that Kiwi chart, right? Let's look at that Kiwi chart and have a look at the general size of rallies. Yeah, that's one rally. And what happened at the top there? A little bit of peter out, a little tempt higher, oh, didn't get there, a little struggle higher. Then you had that sort of reversal day. Yeah, that bearish engulfing. Bang, bang, bang. Right, look what happened here. About the same size rally. That was a multi-week rally, tape it out a little bit. Bulls ran into a little bit of resistance, still kept on grinding higher, then had a huge rejection. So it makes sense to sell here just on the Kiwi chart alone. But adding to the fact that the euro is on a rampage and the resistance is at 115, and it's so strong that there wasn't even a pullback in Asia, the notorious pullback zone. All right, the Asian session. Let's have a break, boys. Let Europe take over next session. They didn't even have a break. The Asians just kept on buying. So it was a serious rally going on here. And you know, this is has all the markings of a 115 test coming in the next couple of days. And if the Kiwi wants to get sold off, you know how the Kiwi gets sold off. It gets sold off aggressively. Right? So selling straight the Kiwi, even right now, makes sense to me. You can put your stop just above 73. If we're wrong, we're wrong. And Kiwi's just managed to just be relentless. You don't even have to put your stop at that fresh high. You can just put it above 73. Just had an attempt at 73, a little nascent little rally, and then a sharp rejection again. I say it's going down. Right? I say it's going down because of the reasons we give, and the Euro Aussie is going to go higher. Where's the squeezing also happening? A little bit of squeezing happening here on the Aussie Kiwi. Another pair which have been oversold. And so we've got Kiwi getting hit everywhere. There's no major reason, no major like fundamental reason, just a positioning reason. And every other pair having a better story behind it right now. So the Kiwi's going to get sold as when you buy something, you have to sell something. And in this case, there's a lot of selling of the Kiwi to be done because there's been a lot of buying of the Kiwi. I would suggest it can't before we have a clean out. So what I'm looking for is not a complete destruction of the Kiwi for multi-months, right? That's not what we're talking about here. We're talking about a positional clean out, a couple of 100 points lower on the Kiwi itself. So it's down to say 71, and a Euro Kiwi rally up to say 160. Yeah, then we can sell, and there's no reason to rush in because you know those Euro Kiwi sellers, they love that grind lower, just adding to positions, making money, and they've definitely been put on you know check, right? They've been like, oh Jesus, that was some pretty aggressive reversal. You know, you don't sell into that unless you're a brave trader. And usually when you have big candles, just big candle theory is you have continuations. Yeah, that's and especially when it's crosses. So I would suggest the Kiwi has another clean out, and you know, let's sell towards 160, even 162. That can happen in 2 days, 3 days. So let the market sell off before probably trying to re-establish those shorts. It's we can sell later, we can sell higher. If it doesn't happen and somehow the market reverses, maybe Draghi tonight at the big meeting comes out and says, hey, you guys really misunderstood me yesterday. I have no intentions of tapering and raising rates in 2018. You know, say something to get the market to reverse that rally, and it's not even reverse it, but just delay it, because that's all the ECB can do at the moment. Then yeah, then the bears can take control of this, and if the pound goes sideways, perhaps the Kiwi doesn't have to be cleaned out, and then it can start to grind up, then the euro yen can fall. But this is not a bad trade at all. You know, buying this, hopping on, it is high, does look like it's gone too far, right? But there's reasons behind it that are really powerful, and it's a trade which makes a lot of sense. So I'm not going to judge anyone badly for jumping on this level, even right now at market, right? Stop just below, say, 155, targeting 160. That would be the trade I would play on it. Alright, so we're anticipating sort of a positional clean out of the Kiwi if you're going to get involved in that trade. Alright, I'm just selling straight Kiwi, that's the way I'm doing it. In terms of my other trades, because of the concerns about the Aussie and the dollar yen and the stock market, I'm going to close the Aussie, but I'm going to let the euro run. There's definitely no reason to get out of the euro yet. If there's going to be a reason, it's going to come from Draghi. And after Draghi speaks tonight, no more Draghi for a couple of days, right? So maybe the market will then use that opportunity to get to 114. Then with 114, it's probably close enough to 115 that sellers would say, hey, well, let's just wait, right? You've got to think about the market like this. You've got to think about the market as some sort of game, and try to think about how other traders are thinking. You know, because that's very important. Price action is one thing, and then thinking how other traders are going to interpret that price action, and if there's fundamental reasons, understanding how big those fundamental reasons are. And the ECB normalization trade is a 2-year trade, euro to 130, and it could be a euro trade to 120 this year alone. So it's definitely a trade which has legs. Any sort of normalization trade's worth a lot. The pound recovery trade's worth 2,000 pips. You know, the Kiwi and the Aussie rate hike cycle beginning, whenever that happens, maybe 2018 or end of 2018, that's worth 1,000 pips to the top side. Right, so these interest rate changes from the central banks are really big things that start big trends, and the ECB one is beginning. Alright, so yeah, that's my rant, and I know it's complicated and there's like all these moving parts, but we'll talk more about it as it goes forward. I'm going to be back a little bit later, guys. I'm going to be doing the live panel that's happening at the ECB Central Bankers Forum today. We have some big name speakers. We have all these speakers in play, actually. Even Kuroda, sneaky little Kuroda, can say something to get the market a little bit more worried about Japanese tapering, because Japanese have to taper at some point too. And people sort of discard the Japanese. They're always going to stay the same, but if he's going to unleash a new policy or be upbeat, as you know, with everyone else, then maybe he lets something slip, or is mistranslated or misspeaks. But definitely, he can still impact the market. The one I'm most interested to hear from is Draghi. I don't think Carney's going to change his script too much, but Draghi might be concerned about the rally that's beginning. You know, basically everyone blames him, and he's the bear, right? He wants the market to go lower or remain lower just to cement the euro rally. He definitely doesn't want the euro rallying against everything, you know, weakening the competitive advantage. I assume he understands that the euro will rally when they do start to taper and do start to raise rates next year. But you know, in regards to the timing of the rally, I think he wants to have a little bit more control of it. But if he doesn't say anything, you can take that as a given, and this is important. You can take that as sort of implied that he accepts the euro rally. Right? Now, if he accepts the euro rally and lets the market forces, you know, find a fair value for the pair, you know, and economists sometimes think like this, then there's really nothing to stop the euro going to 115 this week. Right? So that's another takeaway. It's not like he doesn't talk the euro down tonight and that doesn't mean anything. It does mean something, because he has every opportunity to try and talk it down. If he doesn't, the market will take it as, okay, well, let's test how high he let's see where the pain threshold is now for Draghi. Yeah, and the market loves a story like this. Yeah, this is the sort of story that can really grab hold. We haven't had a trend for a while. Haven't had a nice big move. And everything's lining up here. The data is a lot better in Europe than it is in the US. And the Fed is inching towards not raising rates this year, not inching towards raising more. So the data from the US has been weakening. Alright, so that's how I'll leave it. And Polez is in play. His friend started a huge Canadian rally, a couple of weeks ago. If he wants to put a cap on that rally, he will come out and say something like, we are still concerned about inflation, and there's no immediate plans to change our interest rate policy, right? And we're still worried about the impact of low oil. He harps on about that, inflation and low oil, then Canadian dollar can get destroyed, because it's enjoyed a very, very nice rally on anticipation of a change from the central bank. All that big selling that came through. Let's have a look at it. Let's have a look at it. All that selling that's been going on for the last few weeks. I have to go back in time. That selling there. Alright, so if he has a problem with that, he will if he has a problem with the narrative, which is that Bank of Canada is moving towards raising rates, then this is the perfect opportunity for him to say that. Right, and if he doesn't, then 130 is likely to be tested. Same sort of deal. That actually puts into play some Aussie CAD selling and some Kiwi CAD selling trades. Alright, traders. Hope everyone is well and survived last night. Definitely was one of the more volatile days. I'm going to be back just before this panel begins. We'll have a little more brief update. I'm going to post that trade here. Targeting, say, 71.80. Nothing crazy. 50, 40 point stop for 100 pips ish. But yeah, it's a complicated stuff, some of that. I mean, I just sort of gave a lot of information and a lot of different topics. And we'll, over time, if you watch the stream, we do go into detail about what each one means. But the bonds and so much, we must do another refresher on the bonds just to make sure everyone's on the same page. They're going to grow in importance, not lessen in importance. Alright. Best of luck, guys.